Everybody, good morning. And we got a new subscriber. Looks like Avi. Thank you. And Rex, Donald, Don, Will, Gary, Dan, Sergio, Cliff, David, Pauline, Svenborn, Joy, John, Ted, Arturo, General Rush. Good to see everybody. And for all my just regular subscribers, like Merle, Jody, Jan, Mary, Laura, Francois, Valerie, Gary, Craig, Rosalind. Oh, goodness. This new monster talking back to me. Whew. It's grapefruit. Ruby red. Ultra Fantasy Ruby Red. It's pretty delicious. Brand new flavor. Guess it came in the pack with the guava and the whatever this was, blue Hawaiian yesterday. Anyway, pretty good stuff. So I know Sergio's like, please stop getting new monsters. Anyway, we've got the S&P 500 right here. Ramped up. Look at that little pullback and boom, right into the 618 resistance. We actually spiked the 272 right there. Right back down, closed in the roadmap line. I'll be dang. I'll be dang. Anyway, sometimes these things, you know, have a habit of doing the thing that I say they'll do, even if I want it to do something a little more bullish. Gosh darn it. Gosh darn it. Anyway. All right. How do we make money today, right? How do we make money? Before we talk about all that, all trading involves a substantial risk of loss. Just because I have gotten stuff right in the past doesn't mean I'll ever get stuff right in the future. And if you put real money on anything I say or do, you may lose money and I may too. Past performance, not necessarily indicative of future results. That's what that kind of means, right? Just because I got it right in the past, I may be a complete idiot and never get anything right again. And this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instruments out there, including stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. If you desire that personal financial advice, hire and consult somebody that knows what the heck they're doing. Or at least they're supposed to be. I mean, you've all heard my stories in the past. I mean, they're supposed to take your personal financial interest in mind. So I'm supposed to say that, but, you know, to each their own. So yesterday, we got the FOMC meeting. They did jack squat as expected. 4.5, 4.5. In line. It was already in the charts. We already knew that's what they were going to do. If you're new here and don't know, watch yesterday's video. I went through it pretty intensively about where I expect them to have to raise rates, where I expect them to have to cut rates, and if we stay in between, probably not going to do jack squat, despite the fact that the market thinks we're going to do 2 cuts for the rest of the year. The dot plot, actually people went more neutral in the current dot plot than the previous dot plot. There were more people expecting to not do anything the rest of the year. Think about that. I've been saying something like that, maybe even saying rate raises. None of the dots were saying rate raises, so wouldn't that be a wrench in the monkey works? Right here today, unemployment coming out. That's about as in line as we could ever get it right there. Philly Fed manufacturing. Supposedly the manufacturing is strong. Strongest numbers we've ever seen in the history of the United States. It's kind of weird. Certainly not the kind of thing that seems like should be the way it works, right? I mean, it's kind of interesting. Tomorrow, the biggest OPEX of the year so far, 2025, coming out. Or, you know, happening. It's not really coming out. It's happening. It's happening, sweetheart. So, whether you like it or not, we've got one of the ginormous OPEXs, which is options expirations. Good, bad, or ugly. There are trillions of dollars of options in the market. A good bit of those are puts. I found a cool little chart I'm going to share with you here in just a minute. So not really any economic news today or tomorrow. Now, this one's interesting. President Trump set to speak at the crypto, whatever the fudge it's called, in New York City today. I can't keep track of all the crypto things. I mean, it's like, the Digital Asset Summit, I guess is what they're calling it today. And it's via satellite, so he's not actually going up there. And we'll see what happens. He supposedly, allegedly, I don't know. I mean, everybody's like, source. I saw some posts about the fact he's going to announce a different plan to actually acquire some cryptos for his strategic reserve, making a change in what he announced just a couple weeks ago. I don't know if that's the way it's going to work. So, Aki, how do you learn more about the roadmap line? Right there underneath me. Right there. My channel name, logo thing, it's right under me. If you're on a web browser, this kind of, or like vertically on the phone, kind of assuming, click that, go to my channel homepage. The video I have pinned to the channel homepage talks how it works, how gives you the code for it. If you're like, all right, code's cool, I'm not really a coder, I don't want to get into that crap, that's cool too. Just scroll on down just a touch more, click the more button, expand that description of the video. There's a link in there, $5, get you the market roadmap line, easy button, put it on your chart. And inside Discord, we have links for like MotiveWave and Thinkorswim and other stuff. So that's how that works. How it works. Alrighty. So at odds, this is quite interesting, I feel like. 30-minute roadmap line from above on the S&P 500 futures. 30-minute roadmap line from below on the S&P cash index. S&P 500 cash index. This one doesn't move from 4 p.m. till 9:30, and it's about to move in about 7 minutes. This one, we close about an hour every day from 5 to 6 p.m. Eastern and reopen and keep chooching. And that, even though it shows after hours, the after hours is actually right. It reopened right there. We rallied back up, lower high, and took it back down to test the 30 minutes. Tested it right there, tested it right there. I would like to see this get the fudge away from the 30 minute. I'd like to see it get the fudge away from the 1 hour. The 4 hour still significantly above us, and the daily is right there above us also. So if you want to really know where the big resistance is, here you go. And then the 618 right there. Important levels. This high, highly important. This low, highly important. This roadmap line, significant resistance as long as we're below it. This level right here, 559.05. Let's just round it off even. And if you've been with me more than 5 minutes, you might have heard me say, these fib lines are not solid definitive lines. All right, they're zones. That's why I've got a box drawn right here. And this just happens to almost touch the roadmap line. So clearing this up just a little bit. This zone from right where we topped yesterday to right up about here, that's a big zone of solid resistance. Solid resistance. The market's gonna struggle to get through here. No doubt about it. And as Wrongemer pointed out to me early this morning, we did gap fill that little baby gap right there that we left on the S&P 500 before we promptly retraced right there. So significant resistance right here. What is the level at the top of that? I don't set it hard, like it's not a hard and fast. What's the level? Roughly 59.50, 59.60, 59.50, 59.60. Now, right there, you can see those candle tops. Could even possibly extend into the candle wicks. So it could push it on up just a little bit. Like they're, you know, it's like I said, it's more of an art than a science. There's not like an exact science. Like it's going to reject right there. There was some rejection on the way down. Right there. 1, 2, 3, 4. 4 days of rejection. You know, that day it didn't even try. That little green dot. The green candle didn't even try. It was all the red days. So there's a little bit of stuff we'll have to work through as we get up here. Can we beat it? Like a mule? I don't know. I don't know. So significant resistance. And we're sitting here below it. Let's make the third day. It may take us a few days before we can push up through. Entirely possible. Now, what I don't want to see at all is breaking down. Or pull this up to the high. I don't want to see at all a move back below this 786 level right down here. Let's call it 55.60. Give it just a little extra slush right there. If we get below 55.60, we're going lower low. If we go lower low, we're probably going on down to the 3-day roadmap line. And you can add 3-day on your chart. Have it. That's right here. Right here. This zone. 52.50 to 53.50, 53.70. This is coming up pretty swiftly, so this will keep. The longer we, stay in this zone, this will push up a little bit, raises the support zone. This is kind of a flexible dynamic thing. But if that zone doesn't hold, then we're talking about the weekly. So these are the downside risks. All right, downside risks. Here's the weekly right down here. That zone, if the 3-day doesn't hold, right here. All right, that's your downside risk all the way to 4,900. I would expect that to hold because if that one doesn't hold, sweet baby market, this is going to get ugly. Look where the monthly is. Holy bananas. Whew, that's not a good number at all. Remember that thing I said about below 4,000 before we go above 7,000? We're going to come back and hit this eventually. I think we're going higher before we do that. This is hanging out down here. We're going to come visit this. Below 4,000. We're going to come hit this before we go above 7,000. Look at the last time we hit it. It's been a while. You may remember this. This right here. .com bust. This right here. Draw my arrow a little better. Great financial crisis. Look at that. Like 13 years of correction. Lower low. Guess what? That was all the same correction. So when people, when I talk about this big potential correction coming, how it could last 2 decades, this is what I'm talking about right here. This size move. That right there actually lasted from 2000 till we made the bottom of 2009. That lasted 9 years. Right there. So when I talk about that bigger downturn in the market, potentially taking it all the way back down, to potentially this area, back where we consolidated right there. When I talk about that, that could go like this. Whoop, 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 like that. So we'll have years of pullback, years of rally, and years of pullback. That could last 20 years. All right. Hey, Chris, glad you make it back to Chile, Iowa. Yeah. I think we've had like 6 seasons of the year since we did the Termite Trading Lab thing last week. Absolute crazy. It's been up to like 80 degrees and down to below freezing. And I'm like, what the? My body does not like that. I vote no. But wrong, I'm going to probably find that funny. Anyway, this is what I'm looking for. We potentially did a large 5th wave move there. It's potentially, we're working on the last squeak of the wave 5. The low being back down in here somewhere. 1, 2, 3, 4, 5. Something like that. The guy that came up with Elliott wave theory, the guy that, developed it years ago, like 100 years ago, predicted we'd top out roughly now. Didn't quite get it bang on, plus or minus 10 years or so. And they said we're going to do a big correction. I think we'll probably only go down to about here. Between 1,000 and 2,000 is probably where we'll find the bottom. We may dip below 4,000, come rallying back up, possibly a lower high, and then go down. Make that bottom wherever it is, right there. Not trying to freak anybody out, just big long-term predictions. How do we make money today? Let's talk about it. I mean, most of us aren't trying to trade for the next 20 years. When we were down here, several of you remember, many of you have been with me this long, since we called the bottom right here. I said 6,600 was probably the top, right? 6,600. At the time, some of you were like, well, how do you even know? How do you even know? Like, how would you do that projection? How would you figure that out? And it actually comes, I didn't click that perfectly, but it comes from like right here. This move projected right off of there basically came out right around 6,600. It's not perfect, but pretty darn close. And then what's really wild, this pullback that we've done, you kind of see how we stopped right there. This pullback that we've done potentially puts us right up in the same vicinity. If we push it on up. Now we could stop right here. So if we get up above 6250, that's like a danger zone right there. You need to start setting the sails, figure out how you're going to prepare for what might come. How do we know? It's probably time from this point when we break back below the daily roadmap line. If we break back above, get that extension. Next time we break back below, it's probably not going to be good. All right. Yeah. His name might have been Elliott. The guy that came up with Elliott Wave. Just seeing if anybody's paying attention, Kevin. Anyway, the guy that made Elliott Wave, I've read a lot more stuff from Pritchard than I have Ralph Elliott. Anyway, there's where we're sitting. Already turning this back to the green this morning, holding that 30-minute on. Yes, so far this does lag by 10 minutes. Holding so far. I thought his name was Petunia, but he wanted to name it Elliott Wave. Anyway, sitting there. If we get the break back above that 5,700 level, probably good odds we're going to go back and test the high right there. In Q, my kids say you never know what's going to come out of my name or what, out of my mouth. I never know what's going to come out of my mouth. My daughter finds it hilarious. Yeah, in fact, she had a question for the Turn by Trading Lab people. How she came up front the first day on last Thursday. He's like, "How do you all trust my dad?" She's like, "My entire life, he's just like sarcastic and tries to fool me." Now, if this is 5-wave down, this is what we got to watch. If we make this lower low, this is a danger sign right here. If we do this, right off of wherever we top out here, and then complete a 5th wave move like this, do a 3-wave up to a lower high, somewhere in here, and start back down again, we're probably going lower low. Right there. Probably going lower low. Yeah, see, Ralph Elliott, that's what I said. Anyway, Elliott Wave is kind of the basis of what I do. I've simplified a lot of things because, let's face it, you can be an analyst in the market and spend all your time on one chart predicting the next little micro move, where we're going, or you go hunt through the, what is it, almost 20,000 charts, 20,000 tickers we have in the market available to us. You go hunting through those, find the stuff that's actually setting up patterns that might actually work out in your favor, like our bonus trade today, and go put your money at risk in a high probability fashion instead of just something that, it's like 80-20 rule. 80% of the stuff is doing jack squat nothing. 20% of the stuff's actually doing good stuff. So you got to go find that 20%. Got to go find the 20%. That's where the opportunity is in the market. And you'll spend 80% of your time finding that 20%. It's kind of wild. So Russell looks like it needs to retrace to the roadmap line on the 30 minutes. Start getting below it. Caution. Upside resistance on Russell, still the same area. About to sneeze. Don't sneeze. Somewhere up here around 2,300, roughly. That's where we consolidated right here. I think, this is my big theory. I outlined this last summer that we would do this correction that we're doing right now, and then we're going to go higher and meet that ultimate high. That's my big market theory right now. Bitcoin's probably going higher. ES is probably going higher. NQ's going higher. Unless it all breaks down. And that'll probably be pretty upset because I'm going to take a bath on a bunch of stuff. But I have this working theory that everything's going higher right now. Except for this. This is probably going to stop right here. And turn down. When everything else tops out, this will probably be right here and turn down. This will be a giant opportunity. This may be the most clear opportunity if we stop right in that zone to buy some sort of long-term put spread and make a killing. Right there. This one, I expect to make a spike down, make a bottom, and then make a nice reversal. I found an article yesterday that says, drill, baby, drill. While, yes, we've had some people optimistic and doing some of that, the supply is hitting record highs right now. The amount of oil that's being produced and put on the market is at record highs here in the United States. For much more drilling to occur, we're going to need prices above 80. If you rewind a couple weeks, I said, drill, baby, drill is not bullish. There are certain limited, there's costs to drilling. certain people to be able to invest in new oil need higher prices because drilling oil costs a certain amount. They need $80 oil, or at least on the futures, so they can, sell their oil futures at 80 to be able to finance that drilling. That's a pretty large discrepancy, $14 from the current price. This may dip down here and shoot up here. I do bigger picture, zoom out. This is a big correction. I expect us to come back up and test this 618 zone right up here at 105 sometime out here. You could be like, well, that doesn't fit with the market going down. I'm making no preconceived notions of how all this is coming apart. This could spike fast. I mean, we've seen fast spikes. Look at this. I mean, we came up off the COVID lows from negative oil. We went from negative 40 to positive 130 in like 18 months. I mean, no preconceived notions of how fast we could rip. Time is always the most difficult part of this. I've tried all sorts of ways to predict time. Doesn't work for me. Any reliable way. Price, I can get price. We're probably going to dip. That's the high likely thing to do right now, especially with this back test right there. If we break down below this little, it's probably going to dip right down in here. If we dip down in there, it's probably going to be the bottom, although it does have another level of support and another level of support. We've outlined those in past sessions. Gold, grinding the high, pulling back just a little bit. It was up just a little bit ago. Now it's, I guess we're at scratch now. Scratch for the day on the futures, even though it's like, wait a minute. We gapped up on the restart. That's what happened. Where did the restart go? We popped up and retrace. It's like gold in particular is kind of weird because it has a pit close that happens at like 2 o'clock or something like that. 1 o'clock. Yeah, 2 o'clock. I think it's 2 o'clock Eastern. So the official price for the day is right here. And that's why it's up right now, technically. Futures are one of those weird things. Like there's different closes for different markets in futures. Different official prices for the day. So when people tell you futures are weird and you got to be careful, there's different rules. It's not a universal rule. Like you don't go, oh, futures, it's all the same rule. Every market you trade is a different set of rules. I mean, indexes are all kind of the same. Commodities, it gets all over the place. That's where it starts to get messy. So just be careful. Metals and oils and I think Bitcoin and stuff trades a lot like the indexes, but also there's not nearly as many contracts available. We've only got Bitcoin contracts out to December of 26. Whereas you look at something like oil, it's got contracts out for the next decade. Right there. So I say if we push oil up into the 80s, they can sell oil out for the next 10 years with futures. Kind of interesting, right? That's oil producers use these contracts all the way out here. They sell their oil, lock in that higher price, then no matter what happens, they've got a hedge against it. If oil takes a drop, they can cash out on the spread. So futures are actually used by producers of the commodity. Bitcoin, I can't say that that's used by producers that are mining because this is a highly speculative market. Potentially holding the 15-minute roadmap line. This will be one to watch right here. If we start breaking back down below 84,750, it's an indication that we're coming back down again. Ethereum, I I really want to see this hold, stick the landing here, break back up to 2040-ish, and get moving on up. Why am I just looking at the futures? It's a certified price. There's no other certified price in the crypto land for anything. You'd be like, well, you got Coinbase and you got Binance. Yeah, they've all got different, like all the exchanges work as independent islands. There's arbitrage between them. If you didn't know that's how crypto works. Welcome to the complex world of crypto. NKD, reject. This is a little warning sign here. That swift rejection is probably what flushed arm in the market for the United States right there. Breaking back into the box, getting up out of these, look at that. Look how solid that top is right there for the last couple of days. If we can break through that, everything's probably going up a little bit, at least. Dollar, zoom back out to the daily charts. Strong reversal here. Now, there's been reports that Euro has some problems. Would not surprise me one bit to see this come right back down to the roadmap line before we go higher. This was a massive move from right here to right here, mostly on the hype of Germany going to write 900 billion euros of bonds at a nice fat interest rate, and people wanted a piece of that, so you got to move your money into euros, and that created euro demand. Now it's probably going to pull back, find some support before we take the next leg higher. All right, I go pull all the movers. Everything moving $2 or more up is on the gainers list, $2 or more down. On the decliners list, we look for our two main patterns. If you're not sure what those are, market roadmap bounce, and something I call the measured bounce that I don't have on YouTube at all. I teach it in the Fib class, but I mean, I do go through it in the mornings occasionally. It's basically looking for a 618 retrace, which is a wave 2 or an AB. It's either a 1-2 setup in Elliott wave or an AB in Elliott wave, which are basically the same criteria. We're just looking for the C wave or the wave 3. This right here, measured bounce. We break, this right here, measured bounce. This right here, market roadmap bounce. 618 resistance at that 157.50 area. We get the daily close above that 157.50. Then we have the target at 180 right there. You may go look and try to figure out where the devil I came up with this fib number, 1.1448. Well, it is 90% of the 1272. Take 1272, divide by, or multiply by 0.9. I was going to say divide by, but multiply by 0.9. You get 1.1448. Now, when I did the statistics using this as my conservative entry and this as my exit, I got about a 70% success rate. When I bumped it down to 90% of the way there, we jumped up to 75% success rate on that move right there. You get the daily close above that, and that extension right there, 75% likely to work out across hundreds of thousands of trades, tens of thousands, I tested thousands and thousands of tickers, tens of thousands of trades on the daily chart, hundreds of thousands of trades across all time frames, 75% likely to work no matter the time frame. Whichever, you got to look at the, it's got to be the criteria on the time frame. So if you're looking right here, you jump down on something like this, you're like, well, I don't see the pattern, don't see the pattern, don't see the pattern. Yeah. And it's got to be a certain, like, it can't just be like it lasts forever. All right. There's some criteria to it. There's some nuance to the statistics. That's why I have automated tools that fire off the automated alerts. The bonus trade of the day was found by one of those automated alerts. PRA. Well, that's right up to a crazy level. Looks like that correction's finally done. This was the lowest low. So we just have an initial move up, a retrace, and then an explosion higher. At this point, run that. I don't know if that looks like yeah. Probably expect this to get a little bit higher. If we're going to be bullish, 25, push on up, maybe retrace, and then push on up again, and then get a bigger retrace, something back down in the 20 area maybe, would be what I expect on PRA. 5 below is probably going to spike down to 50. Still got some downside potential here. That was a 3-wave up. I would expect continuation to a lower low. That low that we have in place right now is right there around 63. I would expect something below 63, 50 being kind of an ideal level. Maybe slightly below that low we made all the way back there in 2020 during COVID on 5 below, FIVE. So that looks like it's roughly 49.50. So we may dip just below 49.50 on this correction. That 3 up, that just is not complete at this point, and it would look best. It could extend down to 31 right there. That 618 right there. Oh, we'll be careful jumping on that one. DGNX Limited does not have enough candles to do anything with. Maybe setting up a trend, maybe not. Maybe that's just the first move up and we get a retrace that takes us back to a lower low. We'll be very, very careful messing with that one. Carvana, I expect this to rally back up. I closed my short right down here. I think it was last Tuesday. Yeah, I think I closed it on last Tuesday. I do expect this to rally back up. Right up in the zone. Potentially. And then we'll see what happens. If we break above it, we might go make a new higher high. I'll re-add my short. If we reject off of it, break back below the roadmap line, that may be it. And I'll have to decide what I'm doing. I may not chase it. I don't usually chase stuff to the downside. So be careful out there. I thought we'd get a bounce before we get further continuation. Opti-nose, back up to the roadmap line. That looks like one big pop off the low. This is an absolute dumpster fire piece of crap stock. Don't trade this stuff. What makes it a dumpster fire? Look at all this crap. See all this crap all below the roadmap line? This reverse split kind of cements it. I have not seen a quality stock that did a reverse split ever in the history of me trading. When they do reverse splits, usually that's a sign that eventually they're going to go out of business. Zero. It's usually a very clear warning sign. Now, they can prolong it. They can do 3 or 4 or 5 reverse splits and keep this party going for a while, but eventually they're going to go out of business, probably. I mean, it's just more than likely the way this is going to go down. Go look at the bigger picture of this thing. It was never at 400. That's the reverse split in action right there. Right, reverse split 15 for 1. So it took, these prices were multiplied by 15 right here. If you took it and you're like, OPTN, and you divide by 15, there were the real prices. Got up to a smoking hot 28 right after the IPO. And now it's at 62 cents compared to the IPO. Whew. That's a piece of garbage. And that's why it's a dumpster fire. If you didn't know you could do math on the tickers, you just, type in something like OPTN, and divide by 15, which was the split. You can just do that all the time. If you wanted to inverse it, you multiply by -1. And it looks like a banging hot chart. Like, ooh. That looks smoking to the upside. Yeah, that means it's going towards 0 very quickly. Be careful. Kava, I still expect this one. Now, I expect this one to dip on down here. Why? Turn on this. And that 618 level sitting right in there. Now, it's possible that we bottom in this vicinity of this correction over here. That's possible. 3 wave. The potential for this to be done is there. We are potentially done. I would like to see it go just a little deeper, but it's potentially done. We hit the 1272 of the first move down right here. This is a measured bounce, just in case, you know, you're wondering. That right there, 618 retrace, extension, stopped in the classic part for a correction. That 1272 to 100, that's the classic point for correction. So what does that mean? Now we run a fib line from this high right there at 172 to this low that we just made at 75. We set up this resistance zone right in here. If we get back above that, Kava's probably going on up. At this point, as close as that got, that's almost a measured bounce. The other way, up. It's that low, that high, this correction, which sets the potential upside all the way up here for a bullish move right near 800 to 1200. Holy moly. You could buy at 80 right now and potentially get a 10x to, what is it, 15x? Holy bananas. That's a nice potential. So if you don't mind potentially a little more downside, like $20 more downside. Yeah, that's a 14x upside if we got to 1300 right there. Not a bad deal right there. That's a pretty sweet opportunity. Maybe like, well, does the stock price support that? I mean, do the numbers support it? Well, it's hard to say. Price to earnings, 69. Price to sales, 9. I don't have, I'm not super keen on restaurants in the standard. You have to go look a little bit. They're not horrible. Price to sales. Remember, you can't fake sales. So currently, the price to sales, 9x. It was 16x. So this correction brought it back down to reality a little bit. Guess we can poke around and see CMG. See how we're hanging on something that's a little more established. It's 7. So right now we're a little and this one's corrected down to a 5x price to sales. Remember, you can fake earnings, but you can't fake sales. So I pay attention to the sales price to sales ratio. Things over 20 are in the danger zone. This kind of comparing Kava to Chipotle, they're both kind of in the same boat. About 6 looks reasonable. And that one's almost done correcting also. Yang, probably going to keep pushing it lower. Remember what I said about reverse splits. This is a leverage bear thing. Be careful. Leverage in a dumpster fire. All in one. BEC in. Beacon roofing supply. This is... It's kind of surprising, actually. See, this is one of those you can't always fall victim to the narrative, right? Beacon roofing supply, freaking all-time high. Maybe because of the hurricane stuff. But you go look at home builders and supply. Look at this nasty chart. I mean, holy fudge muffins. You would not think there'd be any home builder supply thing that was rocking and rolling, but Beacon is a beacon of light in a otherwise shifty sector of the market. There's always outperformers. This one probably going to get a retrace off of that extension level right there. Be careful. PTIR is leveraged PLTR. Just go to PLTR. We have downside potential to the roadmap line, and I moved my alert. That was pretty sweet. I should lock those, but I don't because it's a bunch of extra effort. See, moving everything. What the fudge, man? And you can't undo when you move a price alert. That's the stupid thing. You can undo moving a line, and a fib, but you can't undo moving a price alert. This could be the low. It's possible. Possible this was the low. Sitting right here. I mean, maybe we just back tested the breakout. That breakout right there. Like hit it, retraced, popped up through it, came back, retested it. Now we go higher. Potential. But we came all this way. Why not just, you know, mess around here until the roadmap line comes up, and then we can tap it and then go up. That made more sense to me. Why is the roadmap line so powerful? It's based on Elliott wave and Fibonacci. That's why. It's just weird how that all works. ETHD, as I mentioned, we'd come back to the roadmap line. Now we see what happens. Do we bounce and go higher? Take Ethereum down to lower prices. This is ultra short. Be careful. Leverage 59, possibly 60 if Ethereum's flushing down the toilet like a piece of duty water. And watch for this to hold the 618 at 51.83 and turn down, which would probably take it down to the bottom again as Ethereum actually rallied. So there you go. ACN. I'm looking at the decliners now. This was stuff that was $2 more down in the pre-market. Holy bananas. That is still hunting a bottom. We might be... I don't know. Let's clear this up and look again. Clear head. That looks like, wait, first move, retrace, next move, lower high, still in a correction potentially. That move still leaves us with a potential target right down here. Support level right here. If we get below that, kind of a high probability that we're going to go right down here. Somewhere around 235 if we break down below 282 on ACN. Now, if by some miracle magic thing that was a wave 1 and this is a wave 2 and this is a wave 1 and this is a wave 2, when we break back above, yeah, I don't know. That's really sketchy. But if we break back above the roadmap line and the 61.8% retrace there at 352, we might actually be able to break on higher to 400s up here. There's always virtually always a bullish case and a bearish case on every chart. Anybody that does Elliott wave theory and tells you there's not is full of bularchy. Bullshit. Anyway. Now, there's more some charts are more likely to keep being bullish or keep being bearish than they are to have a bull case and a bear case. Like this one right here. Next upside, potentially 464. This is looking a lot like the bubble pattern. When a chart does this and we see this extreme move up, typically we will reach a point where we have a sudden pullback. We do a little bit of chop. Make kind of a flag, if you will, bear flag, maybe, pin it, whatever you want to call it. And then we get continuation down. We find this pattern over and over and over in the market. When there's extra, I mean, it's the psychology of a market, right? We get hope, we get optimism, we get some belief that it's going to work, we get thrill, and then you see people telling other people that, like NVIDIA, like people telling everybody, gotta buy NVIDIA, you gotta buy SMCI. You gotta buy. And then you go get a chart like SMCI That took a rocket ship higher and did this same exact thing right here. We shot up, did this little consolidation, and then we came back down. Now we came up again. We're doing another little consolidation, and that's why I've got a giant down arrow right there with a target down in the 15 area on SMCI. So ESLT, probably going to come back and bring some tears to some people in the market. ASML, still expect this to dip down to the 600s, low 600s before we break out. This is the resistance right there. That roadmap line is the resistance. If we break through it, back test it from above, I'll change my tune. But until that happens, we are still downward bias, looking for that low 600s target right down in here. I got my alert hanging right there, but we might stop at like 630. That's 630. FNGA, formerly known as FNGU, potentially like yesterday, that bounce yesterday did not really produce much results here. Roadmap line resistance, 618 resistance, break above all that, upside potential 764. We'll see if it works out. Race, Ferrari, hit the target, deep retrace. This is why the 1.1448, this is a prime example why that number and why you get the fudge out, GTFO, and don't sit and wait for the higher levels right there or right there, because it can retrace right back down and you could get out, buy back in, and catch it again. As long as we're sitting on top of it, upside potential. I had the higher targets that we didn't quite get. If we break back down below the consolidation we've had just here at the 420 area, if we break back down below that, probably going on a deeper retrace. It's probably not looking good for the home team of Ferrari. Alibaba, AliExpress, still has the upside target between 165 and 200. Consolidating right there. I expect another pop. That's the 618. Like this 166 price is the 618 retrace of the entire drop. That's why the bottom of the bubble is right there. We may, that's like, we may stop right in that zone and retrace again. That move down from, we made that top all the way back there in 2020. We made this low back here in 2022. We moved up, we retraced here in 2024 and made another low. Now we're moving up pretty quickly. That 618 retrace, the 61.8% retrace from the 2020 high to the 2022 low comes out right there at 166. And if we stop there, we're probably going to pull back before we make another attempt to bust through that. Now, if we could just rip on through and back test it from the top before we get continuation up to new all-time highs up in the 400s, but that's really big picture. Might be years down the line. YY, Joy is just kind of chopping around, came back down to the roadmap line, missed the extension target before. We got to the 3618 and then retraced violently. It's pretty nice. Look at the potential here, this high, this low. We've got the resistance. This looks really nice, actually. $49 resistance right there. If we get above that with a daily close, we could take a move on up to the $57 area on JOYY, or YY is the ticker. Joy. PDD, lower high, caution if we can break out 137 near term and 180 bigger picture target. FUTU. This one's set for extension on up here. YNN, pulling back a little bit, but this one's set for an extension up to 68. CWeb, set for an extension up to 66. IBM, I'm in CWeb. IBM, set for retrace back to the roadmap line at 227. BIDU, set for pop, potentially up to the prior highs at around 115 to 120. BABA X, 2x leverage on BABA. If you think that's ripping on higher, this may go on up to 75, which is almost a double on shares. Root. I would expect this to retrace, but it keeps making extensions. So at this point, do a little Elliott wave magic with fibs here. Let's see if I can predict something. We may run out of steam between 159 and 235. Possible we get to 386, but not very likely. The bigger potential would be to run out of steam right there, retrace before we run higher. HTHT. Wow. That is a choppy sideways mess of no trend. I mean, that's been sideways for getting close to a decade, so like 8 years. Let's just move on. PII, Polaris, is probably going to make a lower low than we made during COVID. That's what that chart tells me right there. Danger. Danger trading account. Danger. Do not buy this. This is a knife catch. We are likely to make a lower low. And be careful. Shopify. This retraced to the roadmap line sitting here. This is, I'm considering buying some Shopify. You could aggressively buy this with a stop down here at like 85 or 90. Conservative entry above 118. Looking for the 136, 137 area on the extension. I might buy into that. I'm going to go look at that. I made, for those of you that were following me back here, what was it? It wasn't last year. It was, where was it? It's back here, wasn't it? 23? Yeah. It was right back here. Right back here. I got into a synthetic stock position, which means you buy a call, sell a put to finance that, which has a very low cost if you do it right. Got into that with a very low cost. It doesn't mean the risk wasn't high, but the cost to me was very low. Like, maybe even got into it for credit. I don't remember exactly. I have to go look. It's in Discord. I got out on that pop and made 15,000% return on the money I invested. That was a pretty sweet deal. And I haven't been willing to get back in. I thought about it right here. I was like, talk myself out of it. And then I should have. I mean, that was a heck of a rip, man. 50 to almost 150. Nice upside potential on Shopify. BAH. Now, I'm not telling you to go do it. Remember, all trading involves a substantial risk of loss. You can lose your butt. I may be completely wrong. That's what this whole first two sentences says right there. I may be full of bullshit, and you shouldn't do anything I say. BAH. I'm not professing to be the best trader in the world. By far. I wouldn't have a care in the world if I was the best trader in the world. That right there, potential to bounce from here. But it still looks pretty bad. We get below there, it's probably coming on down to the 67, 70 area right there. JD. Probably going to extend on up to the 50 to 52 area, maybe even on up to the 66 area. SPXL, hunting the bottom. Now, this one gets back above. You know, I really like the fact that the roadmap line and the 618 here together, this one gets back above that. Probably a pretty high probability we're going on up. How much high probability? Look at the Apollo statistics here. That's cool. Pull those up. And we're looking like 71% likely. Not the best, but not bad either. T-comb, there's the bonus. I think I put it in the wrong air. Flip the right one. Retrace, potential resistance right here. Get above that. Trip.com can come on up to $81 target. So that resistance is sitting at 68 for the 61.8% retrace. really close here. I mean, you'd have to make your decision. That's a 3-wave up so far with a little retrace. If we make that bust on up higher, get through this consolidation right there at 70, looks like we can be set for new highs, new local highs on trip.com. All right, air was the wrong one. Got to pull up the New York Stock Exchange one. And it's been a little sideways chop. We've had this on the list a few times recently. Potential for this to extend on up to the 73 area and the most recent retrace right here. Potential to pop on up to the 74 area, and we have potential for 82 up here. And this has kind of been on here a few times lately. And it is aerospace, so caution may not work. That statistics for that potential trade. Pop it over, paste it in here. Go web, go. Oh, that's cool. Not gonna do that for me. Cool. Love it. All right, let's see. Oh, I see what I did. I see what I did there. Try it one more time. Try this one more time. There we go. I copied the wrong link. Air. So there's your target, 74.31. You see 90% upside, 3.67, 30 trades since 1972. There was the high, there was the low, and that potential upside right up in there. All right. Bias for the day is cautionary because we may or may not. S&P turning around. If we break higher, break through the roadmap line, all that stuff I said, if we get through this zone, we're going higher. I'm optimistic, but very cautious.